Good morning. You're listening to Insurance Matchmaking, the show centered around health and life insurance issues, especially Medicare coverage. This is Insurance Matchmaking with Matt Libby Insurance.
Welcome back again to Insurance Matchmaking. Got something I've addressed. I maybe have addressed this a couple times on the show, but since I've been doing some of my Medicare workshops, and this is one of those things that comes up in there, and you may be familiar with it. It has to do with Medicare, and it's called IRMAA. And I always preface that, IRMAA's not, for my fellow boomers out there, IRMAA's not that sweet little lady that used to write articles in the newspaper that, funny things about her suburban life and such. Like one of the titles was "The Grass is Always Greener Over the Septic Tank." Might remember that. But this IRMAA is actually, it's an acronym. Government loves acronyms. And it's IRMAA, and it stands for Individual Medicare Income-Related Monthly Adjusted Amount. That's what it actually stands for. And what it is, the way it hits you, is that if you're at a higher income, you're going to pay a surcharge on your Part B premiums and also your Part D premiums, the ones the D is in dog for drugs. Those are going to be have a surcharge based on your income if you've hit one of these income thresholds. And one of the things I'm always telling my attendees at my workshops is like, I'm sorry, I didn't know you 2 years ago to be able to warn you about this. So hopefully this will get out to some of my radio listeners that I can help you save some heartache down the road. And what it is, Social Security, when they're establishing what your Part B premium is going to be, which the standard rate currently here in 2023 is $164.90, basically $165 if you want to round it off. That's for 2023. Of course, it's going to go up in 2024. So if you're listening, this is maybe in a podcast, you're listening to it later. That was the 2023 amount. So don't confuse that if the amount's different at the time you're listening. But what they do is they'll look back 2 years to see your income. And of course, most people who are going on to Medicare are usually working before they went on Medicare. And so their income's going to be generally higher at that time. And also, maybe you made some life changes. A lot of times people are, I'm going to sell some property, so I've got that money in the bank. Or your 401k that you have through work's not performing very well, and you decide, you know what, I'm just going to eat the tax this year and cash it out and invest that money the way I want to do. And unfortunately, as I mentioned, Social Security will look back 2 years to look at your income. So you may be retiring and not have an income that should be over that threshold, but it was 2 years ago. So that's why I try to get this information out to warn you a little bit about how that IRMAA assessment works. And kind of break it down here a little bit. If you're single, currently for this year, the amount that they look back on is if you were earning more than $97,000, you're going to have that surcharge. And there's different levels of income, and I'll break that down here in a bit. The one good news also is if you're married, you get to double that amount, and you each can earn up to, well, not just the fact you could each earn up to 97, you could still be a sole breadwinner, but by doubling that 97 amount to 194,000, you could still, as long as you're under that amount, you can avoid that penalty. But one of the things, if I'm talking to you, you're 62, 63, thinking about cashing out your 401k from work because it's not doing very well, and it could put you over that limit. That's one of those times when it might make sense maybe to roll that into another qualified account, maybe something like an annuity that you can put your money there fairly safe, and it's not going to lose anything. You might have some years with some good gains or a year with a zero gain, but your principal amount and any earnings you've earned on that will still be there versus having it in something more volatile like the stock market that goes up and down. And when you decide to cash it out, unfortunately, it was a down year and you're losing out. So it's not just the tax of that first year. So that's why I wanted to bring that up is, kind of give you that warning out of, like I said, when I'm talking to people that are 64 and a half, turning 65, I didn't know them when they were 62 and a half or 63 and say, don't cash out that 401k if you're going to take your Medicare at 65. The way the Part B premium is working, like I said, if you're the $97,000 for an individual, and if it's under that, it's going to be that $164.90. If you are over that 197 or 194, under 97 or under the 194 as a couple, your Part B premium will be $230.80. So it's, it adds another $60, $70 to your monthly premium. And of course, if both you and your spouse are going on Medicare at that time, it's going to add that to both of you. That also, as I said, also is a surcharge to your Part D premium. So that Part D premium is going to be $12.20 more than whatever the stated premium is for that plan. So, and that range on that $97,000, it's $97,000 to $123,000 is for that first level. Of course, again, double that if you're married, $246,000. That's where your premium will go to that $230.80. So then it goes to the next level, $123,000 to $153,000. If your income is anywhere in that range, then you're going to be looking at your Part B premium being $329.70 and $31.50 added to your premium on your Part D. And then at 153 to 183, Part B will now be $428.60 and $50.70 added to your Part D premium. $183,000 to $500,000, Part B premium will be $527.50 and $70 is added to your Part D. And there's one more level. Like I said, it's several levels of it. If your individual income is $500,000 or above, or if it's $750,000 and above for a couple. So it's not double there, but anything over that Part B premium will be $560 and $76.40 would be added to your Part D premium. So anybody their income is over that's what it's going to be. It caps out, so it doesn't matter if your income is $500,000 or $5 million. It does cap that premium at the $560. And everybody's like, well, heck, I'm not making that money now. That's what it was. What do I do? There is an appeal process. That's something you can, it's actually a pretty simple form to fill out. I'm going to kind of go over that here in a bit. But you can call our office and say, hey, I got this notice that they say I have to pay this for my Medicare Part B, and we can help you with this appeal process. And it's actually pretty easy to find, if you just want to do it on your own. But as I said, we're here to help on that if you need it. But you can just go to IRMAA Appeal. Of course, you have to spell IRMAA right, IRMAA. And you might be able to misspell it and still get it. If you're missing an A or something. But there is a form, and then you send that into Social Security. And the way it is, there's some certain life-changing events that might qualify you to be exempt from that penalty that you thought you were going to get. And the first one is marriage. So if you're actually getting married, and that's going to double your household income allowance because you're now not just a single person, that could be the life-changing event that qualifies you for the savings. And also, the reverse is true. If you get marriage, divorced, or annulled, the higher income, your spouse might have been the one that was earning the higher income, so your income now is a lot less. That could be a reason to be able to appeal that higher premium. Death of your spouse, again, changes. Their income may not be, their income source may have dried up when they passed away, and you're not going to be earning that. So that's a life change event that could qualify you to be able to appeal the findings of what you're paying for the IRMAA surcharge. Work stoppage, you went ahead and retired, or work reduction, you're not earning as much. You can show, that gives you that opportunity to show them, hey, yes, I had that spike in income, but that's not my ongoing income, and you can get that possibly removed or reduced. The other things generally is once they do establish it for a year, a lot of times you're basically going to be stuck on that higher amount. And again, it should correct itself once you file that next year's income tax, but it never hurts to fill out the appeal to maybe change that. But loss of your pension, loss of an income-producing property, and an employer settlement payment could be a reason to file the appeal. So it could be, a settlement, of course, could be looked at the fact of, yes, you got paid it in a lump sum, but it was for money owed over several tax years, so that might put you in a position where it's not going to give you the surcharge. Again, I'm not the expert making these decisions, but I just kind of wanted to lay it out there that these are the reasons that you can submit the appeal. bill. And then you just have to fill out the form, what tax year you're putting it for. So like if you found out this year you're getting that surcharge, you would put for 2023 for the tax year, and then your estimated adjusted gross income, adding in if you had any tax-exempt interest, and then you're going to check what your normal filing status is for the tax year. And there's, like I said, there's just kind of some step-by-step instructions of how to fill this form out. That's something we can help you out, and it just needs to get forwarded to Social Security for them to adjust your IRMAA. So I tell people, IRMAA's not a sweet little old lady. IRMAA's not your friend. IRMAA's not very friendly at all. So, and you know how it is when the government decides they're going to charge you more money, it's hard to get them to stop charging you. So try to avoid it to begin with. If you're close to that one of those amounts of, you want to make sure you're not going over, or if you did have a big spike, maybe you won the lottery. A lot of people say, I'm going to retire and quit working. Well, depending on how much income you gained, you might want to keep working just so you don't have that surcharge, and then a couple of years later and it's not income anymore. But then again, if it was a really big lottery, is it going to really bug you if you're paying an extra $500 if you got $500 million? So anyway, that's the IRMAA surcharge. And as I mentioned, it is, you pay a higher Part B premium, and you do pay a surcharge on your Part D coverage. And that's going to apply if you have a Medicare Advantage plan, even if it's a zero premium plan, because it does include the Part D, then you would get that Part D surcharge on your zero premium Medicare Advantage plan. And then, of course, all of your standalone Part D drug plans that you pair with a Medigap plan, you're going to have a premium for those plans, and that surcharge would apply to you. So any questions on that, give us a call at the office. Again, that number is 931-881-3969, and you can also find our contact information by going to the website insurancematchmaking.com. That website is live now, and you can submit your show questions there and contact us for any help on any other insurance that you may be needing some help on. So with that said, I think I beat the dead horse of IRMAA here, and let's move on. But like I said, if you got questions on that, please reach out. If I don't know the answer, I'll try to find it, or if I'm not the one to help you, I'll get that out also. So just let me know how I can help, and we will go into our commercial break here, and we'll be right back in a couple minutes.
Looking to do some remodeling? Just getting organized? Consider donating your extra household goods and materials to the Habitat Restore. Not only will you be supporting your local community, but all donations are tax deductible. Our inventory is constantly changing. Our prices are well below retail, as well as one-of-a-kind items. Every day's another opportunity for a new deal at Habitat Restore. Pay us a visit at our new location at 560 South Jefferson Avenue, or visit our website at UCHabitat.org.
The Y is an awesome place to celebrate your next birthday. Whether you're looking for a pool party or an indoor adventure, they have the perfect place for you. At the Y, your child will have a party to remember, and you won't have any stress. Come see them at the Y, and let's celebrate. Did you know the Y offers homeschool fitness classes? The YMCA Homeschool Fitness Program focuses on class participation, developing healthy habits, making new friends, and learning new forms of exercise and games. You can register your child for the homeschool fitness classes at the Putnam County Family YMCA.
And now, back to Insurance Matchmaking, your path to health, life, and Medicare coverage with Matt Libby Insurance, hosted by Matt Libby.
All right, and welcome back to Insurance Matchmaking. We were talking about that IRMAA. Well, now I'm going to talk about some ways to maybe get some money back. Just got introduced to a new accident plan that has a lot of great benefits, and it's not rated on how old you are. It's just basically an individual. It's broken down into whether it's an individual, a couple, or a family. And one of the things that's really neat about this plan, I think, is one of them is it does have an accident disability rider. And if you've listened before, I've talked about riders are what gets added to the base plan. You pay a little extra fee for that rider. And some plans Some plans will have free riders, but they're not the base plan, so they have to include them, call them as a rider, but they're not always a charge on them. Some plans will do them automatically, but this rider that I'm talking about, it would be at an additional charge. But it's a $500 accident disability rider, so the good news there is you've have an accident policy that's going to reimburse you for certain types of accidents. And the way it does that, and I'll get down into the breakdown of that here in a bit. If for whatever reason you get hurt and you can't work for a while because of that injury, then you could qualify for the income disability rider, and it will pay you $500 a month while you're out on that disability leave. Now, of course, I know that's probably not anywhere close to what you're making on that job, but that $500 could still come in handy to cover some bills and things while you're not able to work, or maybe you might be able to do some income generating things that don't require you to be physically able to do your regular job, but at least you've got that little bit of extra income to help cover some bills or keep your car payment going. And there's no restrictions on what type of employment you have, and there's no health questions for this policy. So anybody can qualify for this plan. You do not have to be in great health. You don't. And again, as it's an accident disability. So unfortunately, this plan isn't going to pay anything for disability if it something that happened, like you get cancer and can't work anymore. That wasn't caused by an accident. So it's not going to pay for that, but it will pay if you get hurt. And especially if you're in a physical type job, you're working outside, or you're somewhat dangerous job. And a lot of times, traditional disability plans won't offer for someone, say they're a roofer or a lineman, on electrical wires. They may have a hard time getting some affordable disability insurance. This would still cover. There's no restrictions on what your job is. So this could come in very handy. So that's one of the key features of this plan. The other one, this is unique. I've never seen a plan before that has this, and maybe I've just been under a rock and didn't know it, but it's parent coverage. You can add you or your spouse's parents on the same coverage and at the same level as yours, as long as they're under the age of 74. So, if you're 60 and your parents are 80, you're not going to be able to add them on it. But if you're 50 and they're 70, you can add them in. It's the same rate as your plan, the same coverage as your plan, not the disability rider, but just the basic accident plan. And people think, well, why would I want to do that? Then they may have insurance. Again, they may be on Medicare, and you're thinking, well, they don't need anything. They've got Medicare, they've got health coverage. You have a parent falls and breaks their hip and gets hurt. They're hurt now because they broke their hip. Who's taking care of them? Probably you or your spouse, and now you're taking off from work to take care of that injured parent while they're recuperating, or you're spending a couple days with them at the hospital. You're not working during that time. So even though their hospital bills and everything may be covered, it'd be nice to get reimbursed for the time you're losing for work for your parent. So it works just like you would do if your children got hurt. You're not going to be working because you have to take care of the child. You have to stay with them at the hospital. And it's very inexpensive. The most expensive level on the accident plan is $22 a month for an individual. So if you added a parent, it's just another $22, and they have the same exact coverage. And I'll go over those here in just a little bit. And there's also this one there is a health screening benefit, and it's like a couple dollars a month you add on, but it'll pay $50 per year to help pay for 26 different health screening events like a mammogram, chest x-rays, cholesterol tests. If you have any of these health screening tests in a year, you can get reimbursed $50 on that. And again, a lot of those things are covered by your insurance. Sometimes if you donate blood, they'll do a HIV and cholesterol test just by recording that you got that test done, being able to claim that they'll reimburse you the $50 because you're doing something to help protect your health. So it's just a little perk that gets added on. That's an option, not necessarily saying you should get it, but I wanted you to let you know about it. And this plan also comes with accidental death and dismemberment coverage, so it can be also used as a life insurance plan. And I'm not going to go into all the details of that part, but there's 3 levels of this plan, what they call the core plan, the preferred plan, and the premier plan. And the accidental death on that, the core plan would pay $75,000 to your beneficiary on your death, and it would pay you $15,000 on your child if you lost a child to an accident. And then it's $100,000, $20,000, and then Premier is $150,000, $25,000. So they can come in handy. Again, sometimes people aren't in the best of health and they can't get traditional life insurance because of those health conditions, but an accidental death benefit at least will pay out something if somehow, God forbid, but you're in a car accident, plane crash, something happens at work, an accident at work, your beneficiary can have some income to help them on that. Like I said, if you don't qualify for traditional life insurance because of your health, at least you have something that will cover your spouse and your family if you don't come home from work because of an accident at work. So some of the kind of examples are there are payments that will pay out if you get a burn and it's on a second degree burn and you need to go, say, to the urgent care and get treated on that. It could be paid from $100 to $1,000 for that burn. Again, that depends on the size of the burn area on your skin, of course. And so the core plan, it's $100 to $1,000. The preferred's $125 to $1,500, and Premier's $150 up to $2,000. And that's just on I say simple. Obviously, third degree burns are much worse, but it also will cover that. Or if you end up in a coma because of an accident and it lasts for at least 7 days, it's also going to pay $10,000, $15,000, and at $15,000 on both of the two higher levels. Again, your health insurance is probably covering that hospital cost, but you're going to have family members out of work, you're out of work, and it's going to help make up for those costs. An eye injury on the core plan, $50 or $200 depending on the severity. Broken bones, and again, talks about what that bone is or how severe it was. Skull fracture, $1,000, $2,000, or $3,000 depending on the three levels of the plan. So there's a lot of different things that this will cover. Talks about appliance. Sometimes you have, I know people who have injured their neck and they put that what they call the halo on there. So that would be considered an appliance that is for treating that injury. There pays out for that. It'll pay reimbursement for ambulance. Again, your ambulance is usually covered by insurance, or you may have especially with my Medicare clients, you're going to have a copay if you have a Medicare Advantage, and this is going to pretty much kind of replace that ambulance cost. Again, it's going to be because you had an ambulance because you got hurt. Maybe you fell off a ladder, tripped on the dog, and got hurt. It's not going to pay for the ambulance if you think you're having a heart attack. This plan is, again, it's an accident plan. It covers injuries. It's not going to help you out because of something happening as a health issue. It's always going to be. And I had, early when I started in my career, I had someone who got food poisoning and had an accident plan and filed a claim on it. And they're like, I'm sorry. Yes, you didn't get food poisoning on purpose, but when we say it was accidental, but generally when you talk about accident plans, it's because of an injury, not just because it didn't happen on purpose. So yes, food poisoning is not something you do on purpose, but it classifies as injury, and so it's not going to be covered by an accident plan. I actually just happened to remember that as I was reciting this here. It's been a long time since I had that issue with the client. Prosthetic devices, artificial limbs, there's a reimbursement for that. And again, it's going to be a one-time fee, but also, rehabilitation. You have to go physical therapy after your injury, then there's some payment for that. So it can come in really handy, and it's really inexpensive. And one of the things I like about this, a lot of the accident plans that I offer my clients, they end when they turn 65, and this one does not. This one, you can get this plan when you're older than 65. You can be in your 70s or even early 80s and still get this plan. So if that sounds like something that might interest you, please contact me. As I've mentioned in previous shows, I try to kind of end the show with always remember, the website is insurancematchmaking.com, and we have a space on there where you can submit questions for the show. Also, I'm always looking for guests because it gets hard sometimes to fill the time here of just me talking to you about plans, and it's probably kind of boring to listen to all that. But when I can have conversations with people that care about some of the same things I care about, if you're in a nonprofit and you help people that are kind of the same people who are my target audience as a client, I would love to have you on the show and talk about how you can help them and how that, or how that relates to insurance, what I have to offer there. I've mentioned before, I am a veteran, so anybody's working any kind of nonprofits with veterans, I'd love to have you on the show and talk about what you're doing to help veterans, and especially older veterans, because they also are prime Medicare clients, as I've talked about before. Medicare is kind of my sweet spot, but I don't just do Medicare. I actually had a phone call yesterday from someone that was very concerned that her daughter had moved to Mississippi, and she's, as we say, very pregnant, and found out the plan that she bought to be her health plan is what they call a limited benefit plan, and it doesn't cover her childbirth in the hospital, and the labor and delivery is not going to be covered under that plan. I'm not licensed in Mississippi, so I'm not going to be able to help her, but I've reached out to other agents I know in those states to see if we can't help her, because we want to make sure people get the help they need. And, it's not always going to turn into a paycheck for me. That's great when it does, but if I can help you, I want to be able to help you. And I can give you general advice, but if you're not in a state that I'm licensed in, I can only give you general advice. I can't do anything specific to really address that. So please go on the website and give me some show suggestions, or even just to give me feedback and say, hey, I listened to your show on Saturday and whatever date that was, and say, I really appreciate you talking about this. Now I have a better understanding of it. Just positive feedback. Share the link with your friends. Tell people, tune in on Saturday mornings and listen to Matt ramble on. But hopefully we'll kind of get to know each other here over the next few months and have some fun with this radio show. I've been having a great time doing it, and it's really enjoyable when I can get a guest in here and we can talk and bounce things back and forth off each other. So if you think you could be a good person to be on my show, let me know. We'll talk. Even if I don't already know you, you may be, like I said, you may be a perfect guest for my show and have something that helps, or something I can pass on to my clients and say, oh, I just met this person when they came on my radio show, and I think you could use their services. So let me know how I can help, and we'll talk to you again next week. And for now, Matt Libby with Matt Libby Insurance Matchmaking, signing off. Have a great day, have a great weekend, and we'll see you next week.
You've been listening to Insurance Matchmaking with Matt Libby, your path to health, life, and Medicare coverage with Matt Libby Insurance.